All right, welcome back to Stock Tricks with Nick for this week's Midweek Movers live stream, sponsored by MarketSmith. MarketSmith is the trading platform that we'll be using to go over each of the stocks between the general market outlook that we'll be going over, the stocks on my watch list going into the second half of the week, and any stocks that you guys request. So one thing that we like to do during these live streams, I know I've taken about a month off from them, but now we put in day one of a potential rally. We want to get started and get ready for a potential follow-through day in a couple days here. Is go through any charts that you guys want to see. So use the comment section, drop any charts that you guys want to see, and we'll be breaking down their group strength, fundamentals, fund ownership, anything like that using MarketSmith. I'm going to give it a second here to bring up the charts and for some viewers to come in here. But we'll start off general market outlook. So with the Nasdaq or QQQs we'll be using for this live stream, you can see we're under all of the key moving averages. We got the 50-day in red, the 200-day in black. We did have that death cross on, when was that? March 1st or so for QQQ. We have the 21 EMA in pink and the 8-day EMA in green. So looking at QQQs, we topped out, we topped out a little bit earlier on the Qs versus the S&P 500. Topped on November 22nd. Since then, we had chopped around, and then eventually, basically at the beginning of the year, day one started flushing lower, broke through the 50-day moving average on January 5th. And then at that point, there was really no reason to get involved in the market. There were a couple playable and tradable bounces through here. We did put in that very sharp bounce off of this 334.15 where we bounced, I think we were down 3% that day, closed the day up 3%, then chopped a little bit, then got going. It looked like, okay, that was the low. We're putting in some consolidation, then we're going to move higher. But right when we ran into that 200-day simple moving average, we hit resistance and then we rolled back over. On the 24th, we put in the previous low before yesterday when Russia invaded Ukraine. That was the low of the day, and similar to the 24th of January, right? Similar to the 24th of January, we put in the low of the day right at the beginning of the day, or right towards the beginning of the day, and then rallied up through there, closing around 3.75. Let's see, what was it? 3.3% up after being down about 3%. We had a small rally back to the 21 EMA, and then unfortunately, it looked like we were going to break through this range and then get going, but we gapped up, sold off that day, and then since then it was another check back, quick bounce. And then now today we got our day one of a potential rally where we made higher highs, higher lows, closed right on the 8-day EMA, but we did so on less volume than the previous day and less than the 50-day average for the QQQs. So obviously still a reason to be cautious. I'm sitting in 100% cash doing more intraday trading if I'm doing any trading. Haven't seen too many setups come through. Next we have SPY, and if you guys can let me know if the volume is good on here. It's been a couple weeks since we've done a live stream, so use the chat, request some stocks that we'll break down, and we'll go from there. Or if you have any trading questions along the way, we'll be doing this live stream for about an hour. All right, SPY, that topped on January 4th, so where the Nasdaq topped on, I think it was like the 14th, SPY topped a little bit later, but same result. Because tech is more heavy with the QQQs versus SPY, it took SPY a little bit longer to roll over, and it hasn't been such a large drop from the peak to the bottom here. So we got our death cross on SPY, I think yesterday. I made a TikTok about this. I'm not super, what's the word? The death cross where the 50-day simple moving average breaks under the 200-day simple moving average is such a lagging indicator. Once the price actually broke under the 50-day moving average and did so on volume, and we had those distribution days, the market was screaming and giving you reasons to get out or tighten up your stops. And then the rest of this has just been how much intraday trading do you want to be taking? Can you move your stops up to even pretty quickly on any rebounds? But really hasn't given you much of a reason to get into the market. Even though we had a follow-through day, what day was it? On the 28th of January, even though we had a follow-through day there, we didn't have many potential leadership groups forming up. So there wasn't much to buy on this follow-through day. And typically when you get a follow-through day, there's tons of growth stocks, traditional growth stocks, breaking out from consolidation areas, and we just didn't see that on here. So once we broke the 50-day moving average on volume, that was your warning sign. This death cross is such a lagging indicator that this happened after the SPY was down 13.3%, happened with the Nasdaq down 16.3, I think, and all of that could have been avoided, maybe a 2% drop from the high before getting out when we broke the 50-day on volume. So with SPY, we're back above the 8-day EMA today on a little bit more volume than the previous 3 trading days. Good closing range, closed 90% of the daily range there, but we're still not above that 21 EMA. And closing above the 21 EMA, we've done it twice in these kind of like island days on February 2nd and February 9th. But outside of that, that has really been kind of the bar to test. Is this just a bounce? Is this just a relief rally, oversold bounce into a resistance area where you have 2 groups of people taking profit, the people that bought right at the low and the people that bought at the previous kind of bounce and then are getting out break even. So no reason to get super bullish just yet, but let's go to IWO. This is a growth ETF, so this tracks growth stocks typically. You can see we peaked. Well, we peaked earlier in February of 2021, and then we just went through the chop zone that was 2021 of trading growth stocks. Eventually, after that March peak, we did get a nice rally in October to the beginning part of November. That was a really good time to get profitable, to size up your trades. You were seeing a lot of different stocks working through that area. And then we rolled over on the 5th, close to when the Nasdaq topped, a little bit before that. And since then, we broke the 50 and the 200-day simple moving average right around the same time. We had a mini rally back up to that in the end of December, beginning of January, and then also rolled down. This is putting in a little bit more of a triple bottom. We did not rally back above the 8-day EMA today, but still nice closing range, 99%, right up there. Doesn't get better than that. But it wasn't that significant of a move, only up 2.2%, where the QQQs were up 3.1%, and SPY, while not as significant, still 2.1%, 2.2%, is back above the 8-day EMA. And last kind of gauge that I like to look at is ARKK. This is not to pile on Cathie Wood. This is just a gauge for risk on environment or growth stocks. You can see this has been a complete disaster since November. It looked like we were coiling up for finally breaking out after digesting all the gains in 2020. That didn't happen. We broke to the downside. And since then, every bounce right on that 21 EMA. Bounce right to the 21 EMA. Same here. So today when we bounced, we only bounced 4%, where in the other kind of overextended bounces that we've gotten on the 24th, that was up 7.8% after starting the day down 3%. So a range from $57.5 to $66, much larger there. Same with the 24th here, where we gapped down and then closed at the high of the day. Come on. Up. I guess that was only 2.2% as well. But a little concerning that we only rallied 4% on this one, giving us reasons to stay cautious. We also have the Fed meeting tomorrow. What is expected of that is they're going to announce a 0.25% interest rate hike. If we don't get an interest rate hike, that would be good news for the market. They're going to rally off that news. If we get anything more than a 0.25% interest rate hike, then you're going to see some stocks and some fear come back into the market. Was this just a retail rally to get into the Fed meeting, and then after that, we're going to get another push back? I don't know. Chances are, well, okay, I don't know, but my guess is if we get a follow through, higher highs, higher lows, I'm still watching that 21 EMA, where that is around 337.44 for QQQs, and for SPY, it is around 430.50. So right around that area is where I want to see us close over that area on a nice bounce and then consolidate above it, and then we can get going. So right now we have day one of our potential rally because we made a new low yesterday, and then we made a new or we closed higher than yesterday's close. So day one of potential rally, we need Wednesday, Thursday, day 2, day 3 to not undercut the lows that we get from yesterday's low for the potential rally to still count. And then day 4 would be Friday for a potential follow-through day if we get the leadership groups and growth stocks breaking out. So that's the general trend of the market. GMIAB. One other thing that I want to look at is GMIAB. This tracks the Nasdaq here in the middle, and then also the advanced decline line of the Nasdaq. You can see in a couple areas in 2021 when the Nasdaq was running higher, but the number of stocks participating in that rally kept moving lower. That kind of kept building up until the final flush that we got here. And now we're seeing both the Nasdaq and the advanced decline line decline here. So one thing that I want to see is not just the Nasdaq push up and make higher highs and higher lows, but also the number of stocks participating in that rally. If we're only rallying with a couple of the names, Apple, Google, Amazon, some of the larger names, unless you're in those very few names, you're not going to be feeling the participation of that rally. So let's see the number of stocks participating, market breadth expand, and get some moves higher. All right, next we'll go to 10 stocks that I have on my potential watch list going into the second half of the week, and then we'll get to any stocks that you guys want to see. I don't see anything in the chat right now. Please drop any charts that you want to see there. So first, we'll start with Dutch Bros. This has been on the watch list kind of throughout 2021 and the beginning part of 2020 here. It's a coffee shop. I think it's mostly in the West, on the West Coast, but probably expanding towards other places. I have one just behind my apartment here, and it's always popping. I don't love the coffee, but that doesn't matter if there's 21 cars in the parking lot waiting for service there. So that's the story behind it. But if the technicals don't match up to the story, I'm not getting paid based on how many cars I see in the parking lot there. I'm getting paid based on the price on the chart. So that's what I need to focus on, with the idea of if this starts trending, then we have a story behind it as well. So this was a stock that really broke out in October when we, going back to the QQQs, we had that nice kind of October rally here. Dutch Bros participated in that rally from 41.32 up to 81.40, nearly a double there, and then started digesting its gains and really broke down all the way down to 38.11. We did not take out the low from IPO day, but we did undercut a lot of the lows that were being put in here. It looked like we were starting to curl up, and then we shake out all the weaker hands with a break under 43.55 here. From there, we had a tradable rally when we broke over we tested the 50-day, never closed over it for 1, 2, 3, 4 trading days, and then we broke over it on heavier volume on, I think this was the 29th of January. That was a tradable rally up until 60, and then you have this nice reversal bar which topped out at 63.20, traded a little bit sideways, and then a second pullback in the market, pulled this back as well. And similar to that action, we have closed over the 50-day a couple times and over $50, but now we're settling below that. We see the high of the day today at 50.14. We closed, 50-day moving average is 49.45. We closed today at 49.41. So we closed slightly under the 50-day moving average. But this is a name that we know it has a potential to break out, and really, when we get those oversold bounces in the market that last more than a day, that don't run into overhead supply right away, this is a name that can jump from $50 to $60 or a 20% gain. So knowing that, and knowing that it's showing good relative strength, it has the 50-day, the 20, 21 EMA, the 8-day EMA, all right around the same price, and we closed either right at or just above those moving averages. We have a nice round number in 50 to work with. So if we do see follow through, higher highs and higher lows tomorrow in the market, this is going to be one of my main focus stocks. Going to the fundamentals, it had earnings per share. So we're going to go through 4 quarters, year over year numbers. Earnings per share was up 900%, 475, and then actually down 50% year over year. Sales were up 49, 53, 50, and then up 56%. And then after-tax profit margins improving 17, 13, 8.5, and 2.5%. It is in the retail restaurant groups, which is a weak group at this point, 162 out of 197. So that's a D group strength rating. There's accumulation distribution of C. That means some of the heavier volume days have come down days versus up days. An A rating would mean all the heavy volume days were on up days, showing institutional demand. So that could be higher. Composite rating 62, that could be higher as well. So there are things working against this stock. It's not in a strong group, but within that group, it's the third strongest stock out of 53, as you can see here on the right. Overall composite rating, so taking everything into consideration, it's the 11th strongest stock out of 53 in that group. But I really focus on this relative strength rating because this is based on price. And like I said, the story is great, but the story doesn't pay me. The chart pays me, the price pays me. So that's what we're focusing on here. Let's check some fund ownership. We only have 2 quarters to work with, 165 and 164. And we have some IBD mutual fund ownership in there. Not too heavy, less than 1% for both of them there. What else? Fund ownership, industry group, and that will be that for Dutch Bros. So for Dutch Bros, looking for a break over 50, especially if we open lower. Ideally, we would open lower in the market and then take that out along with the 50-day moving average with a little bit of gusto tomorrow. Next, we have Ctsh. This is in computer tech services, 112 out of 197 group strength, so that's a C plus group strength rating. It's C minus accumulation distribution, 83 composite, so that's a little bit higher on the composite rating. Let's take a look at within that group of 53 stocks, it's 8th strongest on relative strength, 6th strongest on overall composite rating there. Fund ownership, it looks pretty steady growing. So December of 2020, 2262 up to 2424. So a little bit trending in the right direction there. Earnings per share went from +1, +21, +9 to +64. Sales improving year over year, each of the last 4 quarters, 4, 15, 12, and 14. And after-tax profit margins, 11, 11, 11, and 7 improvements there. So one thing I like to do is go on a weekly chart and just take a look at what's going on there. You do see we based out in 2021. We've since broken out and starting to consolidate a little bit there on the weekly chart. So, like I said with Dutch Bros, this is showing good relative strength because while the Nasdaq and S&P 500 are making new lows under all their key moving averages, this found support today at the, what was the lowest one? The 50-day. The 50-day moving average today, and we closed above the 50, the 21, and the 8. So we're above all the key moving averages while the general market indexes are below those moving averages. So while people are taking risk off, they're like, okay, but not this stock for some reason. Now, you can make the story for this, the fundamentals, the group strength, anything you want, but what it's showing me is price-wise, someone's not selling this as aggressively as the general market. So what I would like to see here is a break over today's high as a potential entry point, 88.52, or if we come back into that 50-day moving average, then you could get a tighter stop, use your stop under today's low and the 50-day moving average around, what was that, 87.04, so a stop 86.95, 86.89, something like that below the round number there. Paul, thank you for the tip. I really appreciate that. Let me know if you have any questions. Thank you for that. Next, we have DDS. This is Dillard's. This is in retail department stores, so 24th strongest group out of 197. A group strength rating. It's got a C accumulation distribution because we did see some heavy volume days on down days here, but we'll get to the chart in a second. It's got a composite rating of 93, and within that group of only 6 stocks in the group, we are the strongest, or DDS is the strongest on relative strength, 3rd on accumulation distribution, but number 1 on composite overall. Similar to the other stocks that we focused on, we're above the 200-day, above the 50, the 21, and the 8-day EMA. So good relative strength, even though this did have a kind of blow-off top here from 416 down to 223. We've consolidated. We haven't put in higher lows, but I kind of like that because when the market flushed, this flushed down as well on the 24th of February when the market was putting in its low, but this bounced right at the 200-day moving average, where looking at SPY on that day, we were well under the 200-day moving average, well under the 50-day moving average. And Dillard's bounced at the 200-day, and you can see has continued to push out, then check back, push out, check back. And now today we closed right in the 90 range for the daily closing range on a little bit less volume. So one thing that I would like to see if I'm trying to buy this is if we do pull back, if the general market pulls back either tomorrow or the next day, does 250 hold? This nice round number. We also have all the key moving averages, except for the 200-day, over 250. So you have a lot of support under where the price is right now. So if we break under 250, that's a warning sign. I don't want to be involved in this name. But this is a non-tech name, so it shouldn't be as impacted by any interest rate hikes, even if it goes up to, say, 0.5% tomorrow. And it's starting to tighten up above all the key moving averages, and the fundamentals are extremely strong for this. Earnings per share up 184, 887, over 1,000. That's what this 999 plus means for MarketSmith. And then 252 year over year. Sales were up 65, 69, 44, 33, and after-tax profit margins, double-digit improvements between 10 and 14%. So checking the boxes fundamentally, we did have this blow off top. It looks like it's digesting that move, and now we're all over all the key moving averages. So if we pull back, test that 250 area, we want to see that hold. Or if we're buying on the breakout, I would probably start my position if we break over today's high, just because breakouts don't tend to work in bear markets. The Nasdaq is in a bear market. I know retail department stores, not as tech heavy, but still, if you look back, not many breakouts are working. So I would rather buy a little bit lower, closer to the support of moving averages or a nice round number like 250 than trying to buy at this breakout over this pivot at 277. In a nice strong bull market, that's completely fine. That's what we want to see, but we're not there just yet. So that's DDS. Let's see. Next we have Gogo. This is in telecom infrastructure, 154 out of 197. So D plus group strength rating, not a very strong group, but we do have a B plus accumulation distribution, 79 on a composite rating. Within that group, it is number 1 on relative strength out of 24 stocks, number 1 on accumulation distribution, and number 1 on composite. So even though the group is weak, this stock individually is strong. Ideally, as we're stacking probabilities on our side for the trade, we want the strongest stocks in a strong group, in a strong market to really press on the gas. But because we have a weak group, because we have a weak overall market, if we do take trades, maybe we're taking them with tighter stop losses, maybe we're taking them with smaller position sizes, because there's really no reason to be super confident in the market just yet. Let's see. So with this move, we did have a high volume breakout here. This was on earnings that had 926% earnings per share growth year over year, including 19% sales and 226% after-tax profit margin. So you can see the earnings per share went from minus 19 last December of 2021 or 2020 to positive 157 earnings per share this year in December. So nice move up there, nice high volume close. We pulled back to the rising 8-day EMA, bounced there, good volume move action higher, and then we've consolidated for 2 days, and we're really starting to tighten up here. Today we were up 0.7%, 0.8%, while the general market was up a little bit more. But maybe that's stocks or money flowing into oversold bounces versus stocks that are setting up a little bit better. So either way, you could see kind of 3 days right around the same price, except for that false breakout on the 11th or false continuation on the 11th. The market was weak on that day, so you could see we'd try to get going, but pull back a little bit. So I'm looking for a break over 1720 as a potential buy point for Gogo. Or if we pull back into around 1650, allow that 50-day moving average to catch, or 8-day EMA to catch up to 1650. You also have a couple previous highs here to work with, around $17 there. So that's Gogo. We'll go through one more, and then I got a question in the chat that we'll get to from Yeti Shark. All right. Next is Lockheed Martin. This is one of those defense stocks that we saw. Zooming out on the weekly chart, kind of a cup and handle here, really nice base where we put in the low, another low, tightened up, and then this seemed like a pretty obvious trade. I did not take it, but right at 400, break over 400, moved up into the 480-ish range, maybe a little bit lower than that. Let's see, what was the high on this day? 479.99, so 480. So about a 20% move from a lot of the war information coming out with Ukraine and Russia. Since then, we don't want to buy a super extended stock. And if you go back and study this chart, 10% move, 15% moves for Lockheed Martin is extended for that stock. So if you have a thinner traded stock or a more growth-ish stock, maybe a 10% move isn't super extended, so you're just waiting for maybe a day, 2, 3 days of tightening action before you buy continuation on the up hand. Where at Lockheed Martin, a 10% move is a pretty drastic move for a stock like this. So when we broke out 20%, we don't want to be chasing a stock that typically moves 5% over a couple days, couple weeks. That just moved 20%. So we let that go. We allow it to pull back to the 8-day EMA. Even at this point, a little bit more digestion would be nice, but you do see volume coming in, volume lightening up, the price action from high to low of each of these days starting to tighten, and we're closing over the 8-day EMA and a nice pivot point right at 450, which is a nice round number to work with. So a couple of things lining up with that. One thing I don't love about this is this is going to be a very, very news-driven stock, and I hate tracking the news. I don't like looking at the news to try and trade. I think it's distracting. I think a lot of the times the stock is going to be doing kind of the opposite of what your first reaction to the news would be. So I try to stay away from stocks like this typically, but this is showing good relative strength, obviously, with the war going on, and it's starting to tighten up, volumes coming in a little bit. A break over 450 is a nice pivot to work with. It's got a group strength rating of A, aerospace defense, 26 out of 197, B plus accumulation distribution, 93 on the composite rating, third strongest group out of 59 on relative strength, 7th on composite, and overall relatively strong fundamentals, but it is really the story behind the name here. So fund ownership going down, that's kind of working against it, but this is December's numbers. Obviously, in December, where were we? We were down here, not much was going on, at least not much that I remember with the whole Russia story. And now we're starting to see that breakout over 400 on heavy volume. It's a different story after these December numbers. So the fund ownership is slightly, it's lagging. But if you can see a stock trending higher along with fund ownership increasing with good fund, with the right funds taking positions, then we're starting to stack probabilities. But with this, it's kind of a lagging indicator. Okay, let's get to the questions. Tell Dollar Tree to really bust out this time. Fundamentals and thoughts on relative strength and, on RS in power. Yeah, RS is one of the stocks that I'll get to. Good eye with that. PWR, same. Is PWR? Let me check really quick. Construction along with steel, so we'll get to that. So, first, strong. Okay, so for the stocks that you're requesting, Yeti Shark, we'll go through those. I got 5 more that I'll kind of get to, and one of them is RS, along with some steel names that we'll look at. So next is LNTH. This was one of those heavy volume breakouts that closed right on a nice round number, 40. So let me go back to tracking here. So this volume breakout, you could see, I pointed with my actual finger here, but this moved on earnings, 257% earnings per share growth year over year, 38% sales, 13% after-tax profit margin, and it was up 39%, closing that day 63% within the daily range and on 1,100% of the average volume. So massive volume, decent closing range, right at a round number 40. This is something that you should go back and study. Also, this was showing great relative strength as we were going into earnings. So this was one that I remember on this day, it came in for a second and then it just took off. So if you weren't watching the screens right when the market opens in the first 5 minutes, you missed this move. I missed this move. But after this point, you saw another heavy volume day where we saw continuation. This was up 16% that day. We pushed higher, and then at this point, we're getting a little bit extended. I didn't want to chase it up at 50 the first time it got through there. But since then, we've had a couple trading days where we trade sideways. We try to get going on the 11th. Let me go back to QQQs to make sure what happened on the 11th here. I think it was a reversal day. Yeah. So on the 11th, we tried to test over the previous day's high and the 8-day EMA, but we closed at the low of the day on the market. So looking back on LNTH's chart, you can see this tried to get going, put in a new high at 56.19, and then closed basically flat on the day. But you did see that reversal bar. We pushed lower yesterday, and then today we pushed back up 5.4%. Not respecting the round number of 50. I kind of thought we would do that if demand was heavy. We continue to see high volume, at least above the 50-day average for LNTH. Ideally, the market pulls back. We test 50, and that would be an area to start, or just a break over today's high, 52.57, potential entry point there. But heavy volume, breakout on earnings, good closing, right at a round number. This is something that I've been studying and something that you guys should be as well. Relative strength rating of 99. It's not in a strong group. Medical products, 160 out of 197. But if we go within that group, it's number 1 on relative strength, number 1 on accumulation distribution, number 1 on overall composite. Really strong earnings per share. We went from minus 86 to plus 10, plus 100, plus 257. So we're trending in the right direction there. Sales up 2, 53, 15, and then 38. And after-tax profit margins improving as well. A-plus accumulation distribution numbers, 97 on composite rating, doing a lot of the things that you look for. But if we could have the market pull back a little bit more, where we could test and build a position around 50, stop under maybe 49 area, 48.70, that would be ideal there. Fund ownership in this has been increasing from 317 December of 2020 to 401 this December. Next, we have Mdrx, another name that has been showing incredible relative strength throughout this entire market correction or bear market in the Nasdaq. This also had a heavy volume breakout on earnings that closed just above 20. Let's see, that closed at 2028. We pulled in under 20 and then eventually got going. This was a name that just kept on fighting the downtrend. So as the Nasdaq, or as the S&P 500 was pushing lower, this was fine. And then as we got a little relief rally, it pushed higher as well. So one thing that I like, it found support around the 50-day moving average, made a new high. So stocks that are making new highs that aren't oil names, ZIM, Mdrx, LNTH, those are the only ones that come to mind. Not many stocks are making brand new all-time highs while the market's in a correction or a bear market that aren't oil, coal, one of those names. So Mdrx in computer software, one of the weaker groups in the market, but obviously if you check within that group, it's number 1 relative strength, 2 accumulation distribution, number 1 composite, right near a new high. So there's no overhead resistance. When you have overhead resistance in a name like, I don't know, just taking Alibaba, that has been in a major downtrend for a long time, you have 2 groups of sellers at every bounce. You have the people that bought at the low, nailed the bottom. That's never going to be me. That's never my goal. But you have people that buy at the bottom, have a nice gain going into an overhead resistance area, and then you have the people that bought right around 100, for example here, that can now get out for break even and then can say to themselves, I'm not a bad trader. This was a break even trade, even though if you replay that trade over and over again, you're going to get this kind of trending where we bounce up for a little bit, then push down, bounce up for a little bit, then push down, bounce up for a little bit, then push down. So when stocks don't have that overhead resistance, like LNTH, beautiful, very little overhead resistance, very little time traded, Mdrx, same thing, same thing. There's only one group of sellers, and those are people that are selling for profit. And if you're a stock that's breaking into a new high while the market's just starting to get going, that's exactly what we're looking for the new potential leadership groups or potential leadership stocks. So great to see here, Mdrx. Fund ownership gradually increasing. We had a little drop in from March to September of 2021, but bounced back to 461 here. Good earnings, up 850, 35, 145, then 295. That's what popped on January 25th here. Sales went from -3, +1, +1, +1. Nothing crazy there, but after-tax profit margins up 25% year over year in the last earnings, and that's really what drove this higher. So that's Mdrx. Got a solar name for you, SEDG, Solar Edge Technology. You saw solars starting to catch a bid along with oil as we're trying to move off Russia oil. One was JKS, but because that had the China aspect of that, you saw that really go from 55 all the way down. What did this bottom at? Like 36. So really sharp decline with the China relationship there. So one name that isn't based in China, based in Israel, is SEDG. You can see it's above all the key moving averages. Really trying, it's very volatile. Obviously, we're in a volatile market right now, but we closed back above 300. So we had one close under 300 after moving out here recently in the bounce. We have a 2-day pivot working around 317. Ideally, I'm not buying a breakout. I'm buying closer to a moving average, closer to a round number, somewhere where I can manage risk and manage expectations, because in a market where if people aren't managing the risk, if they didn't get out in December, they're probably sitting down 20% on the year or something like that. On breakouts, they're going to be selling those breakouts to pay for, kind of pay off their losses earlier on in the year. For traders like us that we saw the warning signs, we got either small or out well before the market pulled back, well before it went into correction. We have all this dry powder that we're ready to start putting into names, but we have to be cognizant of where is the market at? Are we oversold going into a bounce? Are we already kind of extending off that oversold bounce before some consolidation? Right now, today was day one of a potential rally, oversold bounce. Tomorrow's only day two. A continuation here over 317 or what was the high? 316.92, call it 317. Still could work above the 8-day EMA. But if the market pulls back and we can respect that 300, nice round number, allow the 21-day EMA to catch up, that would be ideal for this. But solar was one of the groups that would look like it was setting up for a potential leadership group. Now it's a little bit shaky. We saw a couple of those names pull back recently. So one thing I like about MarketSmith, you can check the stocks in the industry really quickly just by clicking this button. So go here and then just sort by relative strength rating. And then you could see Solar Edge is number one. ENPH, that was a name that had a nice gap up here that was that I traded through here for some nice gains. But then once we broke under these key moving averages, no reason to hold on the way down. This is still under the 200-day moving average, so that's a little bit, I don't know, not great. CSIQ also under the 200-day, FSLR, SPWR, all under the 200-day. SEDG, SEDG, or I call it SEDG, over the key moving averages, but it's the only one in the group. So a little bit of cautious with that now. Then we got a couple steel names, STLD, steel producers, 10th strongest group in the market right now out of 197. So A+ group strength rating, B+ accumulation distribution, 98 overall composite rating. This has a daily average volume of 2.4 million. So the other steel name that I'm talking is RS, like Yeti Shark brought up. That only has 390,000 shares traded, a little bit thinner. So if I'm going to trade a name, I would rather have a little bit more liquidity, especially in a volatile market like this, because I don't want to be in the name and then if one person hits the slam button on like RS, I would get stopped out as we shoot through some support, where it would take a little bit more for STLD to really go through and get stopped out there. So when in doubt in a tougher environment, tougher trading environment, I would go for a little bit more liquid names, because it's going to take more selling to see those erratic bars in the daily chart where, again, the thinner you trade, the easier it is to just see that whipsaw action. So STLD, strong group, really strong fundamentals. Earnings were up 140, 623, 873, and then basically 500% year over year. Sales up 38, 113, 118, 104. After-tax profit margins, very strong there. Strong group. In that group, it's 7th strongest out of 16, so right middle of the road. Let's see, fund ownership increasing there. And then you could just, let's see, on a weekly chart here. Really nice base here. So we pull back, put in a low, chop around, and then we take out that low. So one thing that you want to look for in really strong bases is an undercut of the previous low and the second pullback of that base. Because everyone who gets in on this pullback, it gives them a reason to shake out. So if you're still in this name after the shakeout, you're a strong hand. Now, I'm not a strong hand. I'm one of the weakest hands in the market, especially while the market's in a correction. I have no patience. I don't want to be giving money back. But there's people that aren't like me. And that's what makes this market, that's what makes these bases that we can then trade from. So really nice shakeout under 55. Bounced right over 50, so buyer stepped in at 50, a nice round number. Moved up from 50 all the way to 75, 77 or so, and now we're starting to consolidate, allow that 21 EMA to catch up. Nice round number, 70 and the 21 EMA to use as a potential stop loss. And then I would try to get as low, close to 70 as possible so I can use that 21 and nice round number as a stop. And then just keep my stop loss at 1%, 1.5%, something like that, where if I'm wrong small. And if I'm wrong small, I can size up the trade and still keep the overall risk from my portfolio near that 1% goal. So if you're taking a 10% stop with a 10% position size, that's 1% of your total capital is at risk in that trade. I want to keep around that 1%. In this market, I want to keep that 0.5% because I really don't want to give anything back while the market's weak. I would rather take more risk, take more risk when the market's strong, and if I'm wrong, I'm maybe wrong 3 times out of 10. Where in this market, I'm wrong 7, 8 times out of 10 that I'm trying to buy breakouts. So I'm trying to be wrong small, and if I could keep that stop loss to 1%, then I could take a much larger position and still, if I'm wrong a much less dollar amount here. So if we can pull back into 70, that's where I want to start my position versus starting with a break over today's high, which would be 73. That's what, 3 over 70, about 5% stop, that's traditional or so. But I can't size that as high. And also, if this pivot's too obvious, it makes it a little bit more easy to sell into that area. So STLD, RS, similar name, very, very clear pivot here at like 190 area. The previous highest volume, what was this? The highest volume since last earnings or so. That closed at 190.87, and that's been basically where we've been getting stopped out on any rally attempt. So a break over 190.74, or what did I say, 190.87. That could be your potential entry point, but again, this is a pretty obvious pivot. If steel is one of the strongest groups, I guess this is metal, slightly different group, same idea, steel production, steel manufacturing. But if everyone's watching this and this is a clear pivot, it might get spiked into if everyone else is seeing that. And then one name that is not ready to be bought, very strong though, is SG. We had a 68% move in about 12 trading days off the lows here. Heavy volume coming in on, I believe this was earnings. Yeah, on earnings. It still had negative earnings, but increasing sales. And I didn't listen to the earnings call, but obviously people liked what they heard. 370% of the average daily volume on that day, closing at 87% of the daily range. So from the low of the day to the high of the day, it closed in the 87th percentile there. We had follow through the next day on still above average volume that got bounced right at the 50-day moving average. And then we got that very, very heavy volume breakout over the 50-day moving average and over $30 on the 8th of March. And since then, it really hasn't given you another area to buy, maybe over 31.83. But again, I'm not trying to buy breakouts. I'm more so trying to buy pullbacks to key moving averages or nice round numbers where I can keep my risk small. So for this, if we pull back into more of like the 30 area, I want to give this a little bit of time because again, 68% rally in the last 12 trading days is very strong. It's doing all the right things that should be on your radar, but I can't find an area to trade this against just yet. Maybe 35, but again, it's already extended in the short term. So I'd rather be cautious. I'd rather miss a couple trades than take losses in this market because again, it's not a high probability market to be trading in. We want to step off the gas a little bit. One stock that I did trade, but not with enough position size, and one that I already took profits on was GFS. I posted this on Twitter yesterday, so if you don't follow me on Twitter, it's Stock Trick Nick there. Not a strong group, but this was one that was showing great relative strength recently. Had heavy volume up days. You see the blue bars here. Heavy volume up days, then low volume pink bars, pullbacks. And it was respecting the 50, the 21, and the 8. We were closing above all of that. We had a nice small pivot under 59.70, under $60. I kind of thought that this was just too obvious of a pivot, but day one of a potential rally, day one of an oversold bounce, and man, this thing took off. Extremely heavy volume. What was it? It says volume was only 70%. That does not look right because it was well above the 50-day volume. I'm not sure what that reading is, but you can see much more volume than average, closing in the 93rd percentile of the daily range. And when stocks that are showing relative strength as the market's getting beat down, and stocks that just refuse to break under key moving averages, break under round numbers, those are the ones that you want to have on your radar. So when we do get those oversold bounces, that's the one that you want to focus on. So I took this early on in the day with a break over yesterday's high, but I sold way too quickly, around 61.33 or so. Obviously, hindsight, you look at this and you're like, Nick, why did you sell? It was above my average gain of the last 10 trades. This is where an area that I need to do a little bit more work. Understand that we're still day one. This broke through both the pivot. It's above all the key moving averages. Nice round number 60. And I just have to sit firm a little bit more. So I identified the pattern, identified the stock, identified the entry. But I need to kind of put together the last piece and know, hey, this is day one of potential rally. This can rally for a couple days. At least leave a little bit on to the trade. So that was GFS. All right, so what stocks do you guys want to see? Those were the 10 stocks that I had on the potential watch list going in the second half of the week. If you guys aren't subscribed yet, please subscribe to the channel, and then we'll get to the stocks that you guys want to see. All right, so Dollar Tree, let's go over that. DLTR. Another one that is a non-tech name, retail name that's holding up pretty well, above all the key moving averages, holding over 150 now. I remember I traded this on this day, the day before the new year started, and then things got a little erratic. Let me change this to temporary line. You can kind of see the megaphone pattern. When you see volatility increase, that's never, I shouldn't say never. It does not add probability to your side. If you see volatility, these daily bars whipsawing back and forth, and you see that megaphone pattern, if you're thinking long-term about your risk tolerance, take that trade off, allow the market to firm up, you're going to get more opportunities. And just like we saw, market rolled over, and then still here, we saw super wide daily action. But now we're starting to firm up a little bit and just ride that 8-day EMA higher. So I don't know where you would have started a position in here. Maybe you started it like previously in here and had a stop at 130. That was respected on the pullback here. But this is one, let me go to a weekly chart on this. Is this new highs? Yeah, new highs for Dollar Tree or $2 Tree, whatever they're at now. But yeah, this can firm up a little bit, potential entry point. Or if this breaks out and then pulls back to 150, that's probably what I would love to see out of anything versus just building under 150. But Dollar Tree looking good, riding that 8-day EMA higher. RS, let's go PWR. We just covered RS, so PWR has been kind of on my watch list before because showing good relative strength. Overall, the key moving averages, you have the 200, the 50, 21, and the 8 all in the right order. We're pulling back to 120. Let me write this back down because this is something I should have. I'm not sure on a focus list tomorrow. Focus list is 5 stocks that you're laser focused on, your entries, your stops before the market opens. But pulling back into 120, down 0.8% today, while the market was strong. A little bit concerning there. But nice pivot through 1, 2, 3 daily highs, 4 daily highs right around the same price. Whoops. Track price at 124.76 area, potential entry, or buying against 120. If we can build a little bit over 120 and then that 8-day EMA catches up, it just stacks our probability that we won't get stopped out on random fluctuations in the name. But PWR looking good. Nice move off the lows here. Broke back over the 50, the 28, all the key moving averages on higher than average volume on the 24th here. So as the market bottomed on February 24th, this shot back through all the key moving averages, showing that, hey, this is a stock that we should have on a general watch list. This is good relative strength. All right, so that's PWR. Let's go CTVA. Good liquidity, 3.4 million. Agricultural operations, 49 out of 197, so that's a B plus group strength rating. 89 composite, solid there. Pushing into new highs. Let me check the weekly chart. Yeah, pushing into brand new highs, so no overhead resistance, always good to see there. New highs while the market's just coming off its lows, but this does kind of go to the agricultural, go through the like coal, oil, those type of like secular names there. So it's not like a tech name breaking out to new highs like Mdrx or what was the other one that we covered? Ctsh. Right under 55 closing today. A little extended, let's see. We are 3% from 3.6% from the 8-day EMA, 6% from the 21 EMA. Ideally these catch up a little bit more and then we can get a lower risk entry point. But if we're trading quickly, like if you're, say we take this trade with a break over 55 and it goes to 56, about a 2%, 1.7%, whatever you want gain. And then you move your stop to 55 and you're just saying, hey, if this goes, it can go. And I want to keep my money in. But I refuse to lose money on a name like this or in a market like this. That would be the way to trade this, being so far extended from some of the moving averages, and it could work. Completely fine if you can get your stop up to even as quickly as possible. But just like keep going back to this is a low probability trading environment. So if this is a low probability trading environment and I know that, I don't want to be doing anything that's going to put my equity curve at risk. I don't want to be taking losses. Or if I do take losses, I want to take them quick and I want to take very, very small. So something extended from moving averages. If this gets going and I buy with a break over 55, I'm moving my stop up as quickly as possible. I don't want to take losses. But it could work right at new highs. Good volume as it's pushing higher. Strong stock, 5th out of 22 in a relatively strong group. Good. VRTX. Biotech name. Let's see, we went from 181 to 260. Biotechs have been setting up for the most part. I don't like trading biotechs just because of the overnight risk with them and the overnight risk we have in the market just in general. So I just filter out biotechs personally, but you can definitely trade them intraday for some gains. See, like this pivot was so obvious that when we broke over it on the 11th, and again, the market also turned around on the 11th, so there's some that go into that, but there were no buyers after this pivot was broken. Like everyone bought right at this point, and then when it came back, when the market came back, no one supported this stock. We pulled back to the moving averages, and then we started tightening up. So that's what I mean by I don't want to buy very, very clear pivots, because it's more likely that everyone's watching that to take some profits quickly on it. But since then, we've moved it up. Nice closing range today, 88 percentile. What do these guys do? Cystic fibrosis, nice. I mean, I'm definitely rooting for the company. It's in an uptrend, above all the key moving averages. Kind of a wick play here. Let's see. Not this. I guess yesterday was. It doesn't show high and lows. I don't love bar charts because of that. Let me. Strong earnings, strong sales, super strong after-tax profit margin, strong stock in a weaker overall group. Yeah, I don't know where you buy this unless you buy just breaking out into 146. If you're already in the name, it looks fine. Put your stop loss under 240, then you have the 8-day EMA to kind of trail that. Then you don't have any loss potential or small loss potential if you did buy with a pivot break on the 11th at 242. It's only 1% stop. Yeah, I mean, this is doing all the right things. I just don't really want to be holding too much pharmaceuticals. Costco. So Costco, above all the key moving averages, nice move today, up 3.1%. Bounced right on the 8-day EMA, the low of the day there. Maybe did we start the day? It does not show. This is holding up much, much better. One thing I don't like about this base is we didn't shake out the low here. So ideally we shake out the low, but that's more so on longer term bases anyway. But this is looking good, above all the key moving averages. Not a super strong growth stock, so not something that I'm going to be focusing on. If it works and you get 5%, 10%, that's great. I would just rather be going back and doing studies, studying my past trades, really like going back through previous market corrections, doing stuff like that versus trading Costco. But that is just me. It's not doing anything wrong here. CNC. Yeah, this is one. A couple people were sharing this chart on Twitter today. Really nice base. We broke out from that. I mean, how many year base? 2018 up to 2021. Finally broke out. Quick check back, undercut the breakout point, and then we moved up again. Nice about 3 weeks. Tightening up there. Nice pivot forming. But again, is this too obvious? Maybe, maybe not. Maybe it's strong enough that who cares? But around 85, yeah, this looks good. I have this on my general watch list. I don't know if I'm going to be trading this tomorrow or the next day, anything like that. But if we do see something like this breakout, if we start to see breakouts hold their moves, like today, GFS, this was a nice breakout over a pivot, over a nice round number, and it held. It didn't immediately reverse. Maybe it reverses tomorrow. But if we could see this follow through to the upside, and then we see CNC break out from this very obvious pivot and then actually hold that move and continue to push higher, then we start getting more faith in the market. And it's not just an oversold bounce, but also breakouts are working. So a great gauge of the market is looking at how are breakouts being held and reacted to by the market. So that's why I have CNC on my watch list, because if this breaks out and it holds, start to get a little bit more confidence in the market. So nice looking chart there. ARIS, how's it going, Dean? Let's see, pollution control. A little bit thin, average daily volume, 231. Really nice action up through here. One thing I like to check is like, yeah, see, like on the 10-minute chart, because it's so thinly traded, this can just drop 1.5%, 2% in just a couple minutes. And of course, that can happen to liquid stocks as well. But you're gonna see a lot more action back and forth. So your position sizing has to be smaller if you're still respecting your 1%, 0.5% total capital risk on trades. It did hold 16 nicely here. Low 1605. Change this to like a 30-minute chart. I like that 16 was respected because that was the breakout point. Break over 16 was nice and clean on this move. And we come back, it gets respected. So there's buying, supporting this area. So if we pull back again, maybe that's where you start. But again, it's just so thinly traded. I would rather miss on this versus trying to get involved and get like a 4% stop, a 3% stop, something like that on any size. But overall, the key moving averages, good volume on the way out, very low volume on the way pulling back in. So it's doing all the right things, respecting 16 on the pullback. Probably not one I'm going to trade though. NVCT, yeah, this was on my watch list. Another biotech. It was a name that I have on my watch list to kind of gauge the market, but today it spiked down 15.7%. I didn't see any news. I didn't go looking for any news on this either, but down 15.7, that's a lot. And that's not something that I want to be involved in. I would rather be involved in slower moving liquid names in this type of market versus something that's very thinly traded and is just going to whipsaw back and forth. CVS. Retail drug, nice move up. Nice closing range today, 84th percentile on solid volume. Yeah, so if this can pull back and allow, like today would have been an ideal day to buy, right? Over 105, day one of potential day one of a potential rally. We had that shakeout yesterday, but closed right at the high of the day, right under the 50-day moving average. It had a 4-day pivot to work with at 105. Nice round number to work with as well at 105. Today was the day to buy, breaking through 105. Now, I don't want to chase this up any higher. If it comes back to 105, then we could see if we get supported by all those key moving averages and a nice round number after a shakeout, then is a potential entry point, but I don't want to chase CVS higher. Spot on, not a pivot buying environment. Exactly. Swings have been working because it buys pulled back at support, especially if there's confluence. Yeah, the more probability you can stack on top of yourself, round numbers, moving averages, strong group, strong stock in that group. Did it already have a shakeout previous in the base? Just try and stack as much probability on your side as possible before taking trades. And right now, breakouts are not working because they're obvious. When breakouts work, people take profit quickly, and that causes those breakouts to spike to the downside. So if we could buy closer to moving averages, that improves our trade probability. ACI. Yep. I have ACI on my kind of general watch list going into tomorrow. Nice little cup and handle forming. 8-day EMA catching up. You got 35 to work with. Volume drying up as this tightens up in price action. One to watch. I'm not going to, like, I would rather trade DDS just because we've already had that drop. It's kind of tightened up. A nice shakeout, bounce. A little bit more, honestly, yeah, both of those are fine examples. I think because this had the blow off top action, but then it has overhead supply. Yeah, I mean, good. I'm talking to myself here, so good points within the same kind of type of group. DDS is department store where ACI is supermarkets, but kind of the non-tech retail money names. But yeah, another good gauge for the market. If this holds the 8-day, if it pushes through higher, then we can get a little bit more confidence. And then AMPH, yeah, absolute monster here. This has been showing relative strength. You can see as the market came back in, this is SPY, S&P 500. This came back in as well, but the market was breaking the 200-day moving average. This was at the 50-day, and then we quickly bounced back into new highs, pulling back, respected the 21. I mean, the 23rd, this broke out before the bottom on the 24th, and the bottom on the 24th, same thing, good closing range, and then just an absolute monster. But am I chasing this, a biotech name up here, especially because we tried to break over 35. We couldn't cleanly, and now it's a little bit overextended. Not something that I personally want to be starting a position up here because we are very extended. 8% from the 8-day EMA, 17 from the 21. But if you caught this move, that's awesome. Great job. Definitely a monster. All right, that's going to be the Midweek Movers live stream sponsored by MarketSmith. If you guys liked the platform, you found some value from it, I use MarketSmith every day as I'm scanning through stocks. If I'm building conviction in a name, if I can align those probabilities, are we above the moving averages? Is the strong stock, strong group? Are fundamentals in order? Fund ownership increasing? All that good stuff that MarketSmith shows very easily. If you guys are interested in using MarketSmith, there's a link in the description below that you can give them a try. Thank you for sponsoring the video, and I will see you guys